Welcome back to another Sunday news and portfolio update. We're going to talk about the earnings that came out this week with Netflix, Snapchat, Tesla, and some Apple products that also came out, as well as some new partnerships with Palantir and Hertz. So let's get right into it. Netflix recently came out and said that they plan to launch their new ad tier for $6.99 a month sometime in November. Now, although big competitors like Apple TV, HBO, Disney Plus, and Amazon have all invested a lot of money into their streaming services, Netflix still has the highest demand for their original content, as shown in these pie charts displaying the last 3 quarters. Now, with this update to their product line, they will now have 4 tiers, with the biggest change in their basic and new tier. Their current basic tier will go from 480p now to 720p, which is what they are calling HD, but they are now offering a new Basics Plus ad tier, which will be 720p, but with 15 to 30 second ads before and during your shows. And that'll be for $3 less at $6.99 instead of what the current basic tier was. Now, I'm no expert in the advertising or the demand for Netflix's ads, but I'm assuming that lowering the price by $3 and then offering ads will generate more revenue for them in the long term, because they can now monetize someone binge watching an entire series rather than just taking the monthly payment from that subscriber. They can now get more money with the ads that they watch when they watch more content. And while I'm still not running out to buy Netflix stock, I do think that this is a good new tier for different optionality between customers who want to pay less and don't mind the ads, and can also be a benefit to Netflix if they can monetize their users further by just the volume of what they're watching. And since we're on the topic of Netflix, they also had their earnings report this week, where they came out and beat subscriber growth with 2.4 new net additions versus the street estimate of 1.09 net additions. Now, that is a huge beat, and I think they're starting to understand that they might just want to underpromise and overdeliver. Netflix also had some really positive guidance, projecting net new additions of 4 million in the fourth quarter of this year, while also beating EPS and revenue numbers. And this good news showed with a 14% increase in share price after hours when they announced their earnings. Now, speaking of streaming, we also have news that Amazon's Prime Video will host the first ever Black Friday football game in 2023. We have seen Amazon have great success with their Thursday night football deal with the NFL, bringing in 15.3 million viewers on their first game, which was up from the expectations of only 12.3 million. Amazon also said that during the first Thursday night football game, they saw the biggest 3 hours for US Prime signups ever in the history of Amazon, including Prime Day, Cyber Monday, and Black Friday. Now, I think this is very bullish for Amazon, streaming companies, and live sports, because the goal of Amazon Prime membership is to create the most sticky membership that they can. And bundling these live sports, great TV shows, Prime Day shipping, all of that into one subscription really helps to eliminate churn, and the more they can do to add on to that without raising the price will really make it a high value subscription. And if they continue to make deals with the NFL or other major sport leagues, as well as coming out with new original content, that will only continue to bring the Prime memberships up over the long term. I believe this is also a part of a larger trend, with streaming services like Amazon stealing live sports away from the traditional media companies and bringing it onto their platform. And Amazon is not the only one doing this. Apple is also signing major deals with the MLB to host Friday Night Baseball, as well as working with the MLS to host every MLS game on their service. So as we see more streaming services like Apple TV, Prime Video, and Disney Plus steal business away from these legacy media players, I think it'll take us into a new place of streaming, where the competition is very prevalent and everyone's fighting for big contracts with live sports and other media and content creators. I think alongside that, we will also see the consolidation of these companies into one another, because I truly don't believe that AMC Plus, Paramount Plus, Peacock, and many of these other streaming services will be able to hang with the likes of Amazon, Netflix, Apple, and Disney. I think they just have bigger budgets, better brand value, and more recognizable services. And speaking of Apple, they also came out with some new products this week, with 2 new iPads and an Apple TV. Apple TV was another expected spec bump with increased storage and a newer chip, but they actually lowered the prices for the baseline Apple TV in a time of rampant inflation. Now, they also released 2 new iPads with pretty minor spec bumps, with a new M2 chip in their iPads, and now the ability to hover over your screen with an Apple Pencil. And the other new iPad they came out with was a new 10th generation iPad that is around $120 more than the 9th generation iPad, but with an updated design and a few new features. And again, none of these upgrades are really big. I don't think people are going to be running out to the store to buy these new products. But I think it's clear that Apple is taking a short-term hit on profitability with these new products, being that the new iPhone, the new AirPods, and some of their other devices all come in around the same price as the previous year, but with new features and higher inflation since they last released those products. And I think Apple is doing this to avoid scrutiny with raising prices in a time where everyone's concerned about gas prices, looming recession, corporate layoffs, and many other subjects that are on people's minds. Now, moving on, we also have some news about a new partnership that was struck up between Palantir and Hertz. Now, they have just announced that Hertz will be using Palantir's Foundry software to, as they say, drive operational excellence and enhance customer experience. And if you watch my past videos, you'll know that this is just another example of Palantir executing on their high expectations that they've set for themselves. They've been in the news a lot recently with a lot of new deals, new Impact Level 6 clearance, and now this new partnership with a worldwide chain. So it'll be exciting to see what they continue to do and if Hertz can reap the benefit of this new software. And now, alongside the earnings reports with Netflix, we also had Snapchat reporting an earnings miss and a huge loss of $360 million, up 400%. Now, Snapchat also stated that they're preparing to lay off 25% of their workforce, while also announcing that they're going to do $500 million of buybacks. Now, to me, I don't run a company, but this kind of screams bad management with short-term thinking, as anyone who's seen Snapchat's financials know that investors get fleeced and the management gets compensated very well. It's also not good for morale when you're firing tons of employees while funneling money back into buying your own stock, which also doesn't generate free cash flow or any meaningful shareholder return. Subsequently, Snapchat also fell 27% in after-hours trading. And moving on from Snapchat, we also had Tesla report earnings, and they came in with a small EPS beat of $1.05 versus the 99 cents that the street expected, and a slight miss on revenue of $21.45 billion versus the $21.95 billion expected. So far, earnings season has gone pretty well, with most companies meeting and beating expectations above the historical average. So far, we're not seeing an earnings recession as many people have predicted, but we're still at the beginning and we have all of big tech, and so there's plenty of time for that to go south. And a little update on my portfolio before we end here. I've been doing the same thing for the past couple of weeks. I bought a little Starbucks, SCHD, and Microsoft in my dividend portfolio. And I bought SoFi, Palantir, Amazon, and Google in my growth portfolio. And that's to say I don't think that we could drop another 20%. But I have a long-term conviction in all of those companies that I just stated. So I'm willing to ride out downturns in the future because I believe over my long time horizon of 10 to 20 years that these companies will continue to do great things, innovate, and capture market share within their industries. But I'm also keeping a little bit of cash on the side just in case there is a further drop. Now, if you made it this far in the video, thanks for watching. Please subscribe and leave a comment if you want. I'd really appreciate it. Now, have a good day. I'll see you in the next one.